Welcome back to the channel. I'm Foreman, and today we have a stock update on Argo Blockchain, a stock that I am down over 45% on, and I refuse to buy the dip despite having a cash position on the sidelines. And if you like the video, please share one of these to help beat that YouTube algorithm. It's much appreciated. Firstly, my holding with Argo Blockchain, it is my third largest holding in the entire portfolio out of 5, so I guess it's the middle position, but it is also the holding in which I have invested the most capital. I hold 4,001 shares at an average price of £1.87. This means I'm down roughly 45.67% on my entire position in the portfolio, and in fact it's my only stock that I hold that is in the red. You may already know, but why did I want to buy Argo Blockchain, or why did I buy Argo Blockchain? This is because I wanted exposure to the high growth rate that was being present or is present in the cryptocurrency asset class, as a form of diversification from my usual types of stock investments, but also as protection against ignorance, because Bitcoin was something I did doubt, and so I wanted to research more to learn more about it to see if my doubts were well placed. This subsequently meant that I had done more research on the industry and found an interest in Argo Blockchain, because much like my opinions on gold, I didn't want to invest in the underlying asset of Bitcoin because it's an unproductive asset, meaning it does not produce any value, whereas compared to other asset classes, you may get like dividend stocks, at least then they are providing to you dividend income. I found an interest in blockchain mining companies as they gave me both an exposure to Bitcoin, but also amped up the risk to reward ratio that I love to talk about due to my capacity for risk. And then subsequently I found that Argo Blockchain has some very strong competitive advantages that built up upon their cheap electricity rates, leading to higher margins due to the fact that they have a higher petahash per megawatt capacity compared to the likes of other blockchain miners, and also due to their smart shareholder dilutions that would funnel very clever acquisitions that would further bolster growth for the company. Naturally, this gave them far higher margins than their competitors, but also meant that due to their UK listing, they were very much, or they still are very much, undervalued compared to their US competitors. So why have the shares dropped so much? I know I've spoken about this 2 months ago. Since then, obviously, Bitcoin has been the same. It has dropped 40% roughly since May, and since then, a lot of things have stagnated. Along with Bitcoin, the Bitcoin miners have done so too. But since mid-May, Marathon Patent Group is up around about 30%, and Argo Blockchain is down about 30%. So there is still a big difference in the overall industry. Firstly, I want to say that I made a critical mistake of buying into the hype of this stock, and subsequently shares have dropped significantly, hence my overall position is down by 45%. However, my average was much higher. In fact, my average was closer to around £2.30, which would have represented a far higher drop, and we'd be looking at more around about 60 to 65% decline. But since I've averaged down so much, it's lessened the impact. And this hype was that many of us had widely anticipated the uplisting for Argo Blockchain from the OTCQX markets in the US to the NASDAQ. The opportunity of the NASDAQ is that then the Webull and the Robinhood investors, those with a lot of cash flow, at least in the public, could then buy into the likes of Argo Blockchain without any restrictions, and therefore that could allow them to see a fairer valuation to their US competitors. And whenever it was discussed or asked in their Q&As, this just was ignored. It was like, we can't talk about NASDAQ. Whereas it's a bit fishy, and so what had really happened is they didn't block or stop any speculation on this, and instead, as the speculation was pushing shares forward, yes, we've got the NASDAQ listing, this Texas facility in the books, this is great, shares were rocketing up, and this meant that they had went, okay, right, we're going to use a shareholder dilution while shares are expensive, and this has subsequently led to a decline since then. However, lately, it seemed like a few individuals had started to doubt the legitimacy of the NASDAQ application, or at least the speculation behind it. Myself included, and about 2 weeks ago, I just about started to call it out and started to speculate that perhaps they didn't apply for it. And then a week later, we had seen the likes that they had announced that they were exploring the options of a possible secondary listing on the NASDAQ, which means this whole time whilst we'd been speculating about it, which is in truth the fault of the investor, but also a bit misleading by the company, it's now like, okay, we might start looking now, which has left a really bad taste in my mouth from that management, because it doesn't really show the qualities of a good management. With a good management, you would love for them to be very transparent. You'd love for them to really be committed to shareholders and their holdings. And subsequently, shareholder, at least sentiment, has certainly been declining. But there are a few positive share drivers. As I mentioned, this NASDAQ uplisting from the OTCQX markets provides a wealth of potential investment capital. This could lead to a much fairer valuation to the US competitors when compared to the likes of Marathon Patent Group. They're valued at over 5 to 6 times more. This certainly gives a chance for around about 400 to 500% gain if Argo Blockchain were a completely fair valuation. However, they do have a much lower HODL, around about a quarter, but at the same time, they also have a very high margin on their mining, and so there is certainly some comparisons to be made, and at their current valuation, due to this UK listing, it does seem a bit unnatural to be this cheap. We've also got the Texas facility that is currently in development on a site named Helios. I'd speculated in the past, but they'd mentioned that they could get the cheapest electricity rates in the world. My speculation is that perhaps it will be a solar panel facility included as well, which would lead to their margins being even higher if they owned said facility. They're starting by developing a 200 megawatt facility, but they have the upwards capacity of 800 megawatts, and this presents a lot of potential for Argo Blockchain, especially as these Chinese miners are being shut down. This has lowered the difficulty in China, providing a much more bullish case for the North American Bitcoin miners. And then we also have the 25% stake in Pluto Digital Assets, a venture capitalist fund specializing in cryptocurrency assets, and this is still before their IPO. A few months ago it was speculated that it'd be coming soon, although this may be another misleading investment that may not come to fruition, which is starting to give doubts in the investment. You may say, well, you're down a significant amount, so perhaps that's natural for you to have those doubts, and I would say you're right. However, I'm trying to look at it on a different light, because usually I would just pump money into the stock and then average down on the investment. However, I don't think this is the time for myself personally to average down. And this is also combined with the likes of Bitcoin forecasts, at least at the start of the year, being very bullish for the year end, and some people were listing some massively high figures that were well into 6 digits, which at the current price would represent a healthy gain, especially for the likes of Argo Blockchain. And if you'd like to sign up to my broker Freetrade, where you can get a free share worth up to £200, then click my link in the description down below. But despite all of these positive share price drivers, I'm not going to buy the dip, and I know they could generate a very strong return from this price. However, this is due to a mistake I've made. My mistake was that I bought too early on the hype. I lacked the patience and perhaps the foresight, which is easy to say in hindsight, but I lacked the patience to say, you know what, shares have rallied massively. I'm just going to sit out and I'm going to wait. I'm going to wait for shares to cool off, and then perhaps it will reach a fair valuation that I might deem, and then I will buy in. Instead, I didn't do that. It was a speculative position which I got overexcited with, and I just pumped money in as moment the price went down, which is a very poor move in my opinion, because a speculative position shouldn't take up such a large exposure in my portfolio, which it currently does. The invested capital would make it equivalent to around a 35% proportion of the portfolio, but the total position is currently around 20% of the portfolio. Also, with the management not doing the NASDAQ listing or only now exploring the options for a secondary listing, this has left a very bad taste in my mouth. If they're willing to do this and dilute those shareholders when it does rally up, what else are they willing to do? I've dived into it. I've looked into the distribution of shareholders between different institutions, general public, and also individual insiders, which interestingly, individual insiders, they only hold 0.3% of the business, which would mean that they would benefit greatly from shareholder dilutions because they can use that capital to grow the business further, and it's at no consequence to them because, oh well, if the shares go down, they're not really invested that much. But as long as the business is growing, then they can grow their own paychecks at the same time. And the fact that they purposely played the investors around this NASDAQ application, they didn't try and deny the speculation. They didn't release an RNS saying this is not the case yet, although we might look for it in the future. They just let it happen, which in their position, I may have done the same. I perhaps would have sided with them because it would have been better for the executives and better for the overall business if they're able for the shares to hype up, take that cash and capital and invest it for faster, further growth. But when you combine all of this with the recent application for an aggressive Bitcoin-backed loan of £14 million that is due to be paid back in 6 months, this is extremely risky. This is effectively a gamble. But this isn't a gamble for the executives of the business or the management. No, this is a gamble for the shareholders. And here's why. This means that in 6 months' time, if Bitcoin rises, then all's good. Because guess what? If Bitcoin rises, they don't have to sell as much of their hodl. The whole point of this loan is so that they could keep their hodl growing. However, if in 6 months' time their hodl decreases further, not only will this push the share price of Argo Blockchain down, but it also means that they're not going to sell their hodl. Instead, what they're going to do is dilute shareholders even further. The reason why it's a 6-month duration of this loan is, I speculate, is due to the idea that then the limit over their 30% shareholder dilution in the last year will likely ease off and they can dilute shares more. However, because if Bitcoin does drop in 6 months' time, not only are they going to have to dilute the share pool by an even greater amount, but they're also not going to get as much capital from it if shares continue to drop, which leads it into quite a negative price action movement, which I really don't like the look of. Especially when you factor in the idea that the technology they use to mine the Bitcoin and Zcash becomes less effective over time and their value depreciates, it certainly means that there's going to be a constant struggle for capital in the future, especially if they hold firmly onto their hodl, which might be great for the business and for the exposure to Bitcoin, but perhaps not that great for their long-term shareholders. However, don't get me wrong, just because I've got these negative opinions on Argo Blockchain on this specific moment, this does not mean I want to sell my position with Argo Blockchain. Not at all. Instead, as I mentioned, the mistake I made is that the size is massively overweight than what I really should have done. I compared it to other quality stocks in my portfolio, the likes of Boohoo, the likes of Games Workshop, and I assumed they were on a similar level of quality to these companies, whereas in reality, they are definitely not. Sure, they have some great competitive advantages that mean that they are one of the best in the industry, but the industry itself perhaps isn't that great quality, and the management have certainly justified that share price drop. Whilst yes, there is a very dedicated fan base, I'm likely going to get a lot of hate for this, I have my doubts. But as I said, I'm not going to sell the position because that would be silly. I've had many comments suggesting that, look, Argo Blockchain being down this much on your channel does not look good. You should just sell the position, cut your losses and leave it. I'm not going to do that because I don't think the shares are going to continually go down like this unless fueled by more news. At the moment, Bitcoin is holding steady. It's been holding steady for the last few months. So if Bitcoin drops down, then sure, Argo Blockchain is likely to follow trend, if not do by more. However, there's not really much else or factors that really can push it down, unless obviously there's more bad news on the company, which could happen. My point is that my mistake was that I followed the hype. I bought at far too high of a price. I wasn't patient. I should have been patient on it, and that is a mistake that I will have to pay. And for this mistake, I could easily say, right, this learning opportunity would justify that and I could trim the position and cut my losses. But I still think these share price movers can really take impact over the medium to almost long term and can really bump up the shares, meaning that I don't have to sell at a loss. Instead, my decision is that I'm not going to buy the dip. I could lower my average by quite a substantial amount, but at this point I've risked enough money on this investment. Instead, I'm hopeful that over this medium-term period, that shares will eventually recover above my average price, at which point I could look to trimming the position and really cranking this back down. Because in reality, a speculative position like itself and just exposure into crypto in general really shouldn't be 20% of my portfolio, and instead it should probably be about 5%. I'm hopeful that that listing on the NASDAQ leads to the price increasing dramatically, combined with that Texas facility, and then perhaps, and this is just speculation and a wild guess, perhaps shares might be floating around £3 to £4, at which I would have a comfortable profit and I could sell about half of the position and then leave the rest just a free ride. I'm not sure yet, but that's my plans with the investment. If you're interested in my free UK stocks to buy in July 2021, then click the card at the top right of the video. Thank you for watching. I'm Foreman. Have a fantastic day.